Hello, hello. Okay, here I am. Let's see if everything goes well on the streaming side. Okay, seems like it goes. Yeah, today, sorry for the time randomly choose, but I hadn't time yet. As of today, I've got a lot of things to do, a lot of things to talk, people to talk to, and it was very busy, and so I am. Even in bear market, because when you have two companies and a life, there is a lot of things to do, and I found some moments right now to talk about the markets and in general on Bitcoin, Ethereum, and if it's time to enter the altcoin sector, and the macro environment we are in that didn't change, and so my opinion didn't as well. But it was like 3 weeks ago that I start. That was the last time I spoke about the markets. So I'm going to talk about today a lot of things that I have seen, and maybe something randomly chosen by me with some metrics and on chain maybe. About Bitcoin and the state of the market. I prepared something really fast, and we'll go through everything today. Let's start with the technical analysis side on Bitcoin. You see right here that I just draw these two patterns right here. Let me just take out the Bollinger Bands, the RSI, and the DMAs. You see, this was a descending broadening wedge. This was more or less a rising wedge, and it has just broke below. And so the next support we can find for just the price action itself with the patterns tomorrow is 18.6. Okay, we're probably going to retest, if nothing else, 19.5 if we go there, because anyway, a retest of this trend line is possible, it's close, and so for the short term anyway, that is. But as well, here we have the Bollinger Bands. Let me take out everything else at this point. We have these Bollinger Bands. Let me take this. You see this, we are in some kind of slowly, this is another pattern, it's still falling wedge. This is bullish because it could break to the upside, maybe lead us to 22.5k more or less, watching the price action itself at the very least. But we'll see. We are now just in this falling wedge pattern, and the Bollinger Bands are narrowing. And since the Bollinger Bands are narrowing on the daily chart, and we are seeing on the 4-hour chart that they are really narrow, volatility is coming to the market. The last time we got this kind of narrowing on the Bollinger Bands, you see right here, or right here, even if it was a little bit high, this is more narrow actually, so it's narrower here than this and this probably. We are going to have more volatility, but since we are in a bear market, the targets are the same, and if you take the probability with this Bollinger Bands, and this is something I talked about in my courses as well, and that you see on ChainLog, chainlog.info. On the Discord, I have 3 courses: one for technical analysis, one for on-chain, and one for fundamental analysis for altcoin in general. You see right here that the Bollinger Bands statistically historically when they broke down from the there is this kind of volatility. In this case, for example, it was more or less, you see right here, 45% to the bottom, but you see that here, for example, another thing, from the top to the bottom, from here to here, was still 47%, more or less. Okay, and you get here. Okay, let's take this to this. 36%, more or less on the 40%, and in any case it is from 48 here to 25. But if we take from the very low of the movement it was before, so from here, for example, from here or from here, then we'll have more or less the 45k to 32. There is differences, but more or less are the same. You take like 40% from the top to the bottom, and like 30% from the bottom to the bottom. And in this case is more or less the same. But if we go down here from another 40%, let's take 30%. From the bottom to the bottom, then we could get as low probably as 14k, where we have 25% in this case, but we could go even lower, maybe. I don't really know. We can get from here to wherever we want, or let's take the top, for example, from here. 40% more or less it's in the same zone, and that's just watching the probability historically that Bollinger Bands will break to the downside, because we are in a bear market. But if we break to the upside and we break through that falling wedge right here, we could go even higher and maybe get to the point where we actually get to the 25k or 23k, more or less. I think that 23k is the best spot actually, because you get the short-term holder realized price, for example, on on-chain data. 22.5k is the current one. The short-term holder realized price is the price realized on chain when you move your Bitcoin. Let's take an example. You take your Bitcoin at 20k, but you move those Bitcoin at 25k. Those Bitcoin will be repriced on at 25k on your last movement. So the realized price on chain is the actual price, the current price, that in the aggregate, in this case the short-term holder, those that holds less than 5 months those coins. But in general, the realized price is that of the cost basis of the on-chain transactions that happen on chain. And so if something it's the real cost basis, you can argue that is the real cost, the real value of the asset underlying, because people who don't move really mass their assets, or they just lost it, or something like that. They don't move any Bitcoin at any price to sell, to buy, to put in storage and anything else. So they are not actually participating into the real price of the asset itself. They are not repricing their value of the asset moving coins. So you take only those active members that actually value the price of the coin itself. I'm going maybe too deep on the side of the details about arguments, because I would like you to know better what I'm talking about. But if I'm too verbose, maybe you can just skip to the next argument, because I'm just that. I'll try to resume a little bit what I know, resume a little bit what I know shortly, maybe. So where were we? here, if we take also all the other indicators I have, the 14K you see right here is still the bottom area, the real bottom of the bottom area I just talked about, the 14th of June on this channel here on ChainLog, YouTube on ChainLog, and we can we could have some pretty decent support at 17K actually. That is anyway just a little bit below the last bottom we had, but this this could actually happen. To the upside, you know, we had this that was the 22.5K, and if we watch as well here, 22.5K more or less is the same zone that goes from the 100D EMA and the 70 RSI over both level. So the price could go and stop right here more or less, maybe just making some shadow up above or below. This is for the short term anyway, but because I think we have a lot of month, but I'll try to get argument by argument. I think I will have a lot of months for the bear market to finish, but we'll have to see. And from a long-term perspective, let me get here and let me just let you see here. For example, on the weekly chart, we are below the 200, the 200 EMA and SMA. You see yourself, these blue lines, okay, these blue points and blue line are the 200s on the weekly chart, and we are below. We can argue that we don't have the power or the strength to get above and to start a bull run right now, because we are below. And in fact, until we are below these 200s and the 200s are going flat, I think we'll stay right here. If they start going down maybe, and we'll try and get to the retest of the 26 EMA or the 26 SMA on the weekly chart. Well, if we go above that, and you see right here how much is important that we can actually get above that every time we retest the 26 SMA, these orange points right here, we got below, in fact. And this time, for example, we stayed above. We dipped a little bit down, but we stayed above right here, and we got projected to the upside again. That is how much is important for me, the 26 and the 200s right now, because those are the points I'm watching for on TA from the weekly chart. On the monthly chart, I'm watching the Bitcoin to get above the 50 SMA and the 50 EMA on the monthly chart, but we'll have to see, because we don't actually know if it will. One thing with the Bitfinex chart is that we have the 100 monthly EMA, and it is a 13.7K, more or less the same zone, where if we break to the downside from a 30%, you saw yourself 25 to 30% to the downside, we could go and have support right here. And the 14K, not actually just from price action, are 14.5K in this case, are also helping, supporting the price if we go right there at any time in the last few months that we have had. And that's only for Bitcoin from technical analysis side. If we go into Ethereum, you see that Ethereum, let's get out everything else. I'm just trying here to get a price action perspective from you. Last time we got this rising wedge, and we got the fall back down below, and now we are narrowed inside this range right here, okay, where we had the 12.500 and the 14.200s that narrow the price inside this range. We are just watching the price of Ethereum getting sharked by this narrative merge that was leading Ethereum to the upside in the very first days before the merge, and then we got this the sell-off event from that perspective, and still we are in the same zone we were. Ethereum, Bitcoin is still in the same zone as well, where it was when it was first announced that the merge would have happened, and so this was only speculation about the merge, nothing more. And I'm actually expecting a little bit more to the downside, if possible, before entering, because we have, as I already said, ahead some month of pain again, not because I say so, but just because obviously there is this possibility from a macro perspective, and we are going to talk about that as well. So the thing here is that until we break above 14.23, we are not going higher. Until we broke down 12.5, we are not going down. And where we could go as low, and the lower Bollinger Bands and the 30 RSI oversold level are in the same zone. If we break down below, we can get to 11.8, more or less, hundreds. And to the upside, we have a lot of resistance, more or less everywhere, from the 14.2k, 14.200s and above. We have a lot of to the upside to go through before getting to the 200 EMA or SMA. Weekly, monthly, more or less, there is this thing that we are still below the 200. The thing with Ethereum on the weekly chart is that it holds, it actually holds the 200 SMA as a support right now after the merge. Before it was it got below even, and the same goes for the 50 SMA right here and the 50 EMA in green right here. We'll have to see. I don't think we'll have the flippening, not soon, not in the next few months, not in the next year. If we are going to see Ethereum flippening Bitcoin, it will be probably when Bitcoin will fail to assume its place in the global economy as an asset that helps people to interact and to move their wealth from a place to another freely, and that could be only under multiple governments ban everywhere. That could fail Bitcoin to reach its maximum potential and lead us not to have 1 million Bitcoin, but 110k Bitcoin to 20k Bitcoin, more or less, because we have hodlers right now, and this is more or less the price of the hodlers that still hodl through, and 10k because there are still some speculators, some whale that is buying to speculate from the next price action movements. And and in this case, Ethereum should still succeed in what it is, or just advance, because it changes. Ethereum changes quickly. It moves forward. Meanwhile, Bitcoin is a turtle. Ethereum is a rabbit, and only the time we'll see. Only the time will say if Ethereum will flip on Bitcoin, but I don't think so. Not in the near future, not in the next year. We'll have to have something really huge, because before Ethereum, every time Ethereum get higher, it is sold into Bitcoin or anything. Anyway, you get Bitcoin to buy Ethereum low. and Ethereum to buy altcoins low, and altcoins to buy more Bitcoin, and that's on, and so on and so forth. And in years, and that's what they do, you get more Bitcoins or more wealth. But you have to know what to do, obviously, and that's why I have a ChainLog school just for that. Anyway, let me see if there is enough light still. Yes, okay. If there is not, I have to light on. So let's get the Bitcoin dominance just a little bit before getting into on-chain. Here I'm seeing the Bitcoin dominance getting to a point where we probably have the possibility that we are trying to search here the top. But since Bitcoin is still in a bear market, and everyone knows that the bear market will continue through the next month and so on, there isn't really much movement on Bitcoin itself from a dominance perspective. And in fact, you see the weakness of Bitcoin compared to the last cycle. So you see this are cyclical analysis where there is this cyclical behavior of the Bitcoin dominance, where we got down, we got up, we got down, we up, down, up, down, up, down. And this time, this is the last time we have a real weakness. We got very, very far below, and we got a new low this here from the Bitcoin dominance, and we are getting a little bit higher just to stay on the brink of the what they called altcoin season, but it was just for Ethereum that was sucking in all the Bitcoin dominance and nothing else. So I'm still waiting for the Bitcoin dominance to get to these points right here to enter altcoins, and in the same time, if the macro environment changes, obviously, because if it doesn't, I'm not getting into altcoin anyway. That's my opinion. That's my everything you will see, you will hear here is not financial advice, and I want to be sure you know that this is just educational purpose only. I'm trying to help you out learning about the markets and what I'm expecting, sharing my thoughts on the market and everything else. So let's get into on-chain now. We got the aSOPR, so the spent out to profit ratio, the adjusted, in this case, spent out to profit ratio that takes into account only the transaction on chain that happens that have more than 1 hour lifespan. So we remove a lot of noise. Trust me, if you have this study where the 1 hour coin are making like the 30% of the transaction on chain, you get out these 1 hour coins and you see the real SOPR, so the spent out profit ratio, the profitability of the market, where they are actually selling or moving coin, if a loss in the aggregate, or in a profit state, or even a break-even point. Break-even point is 1, below is at a loss, and above is at a profit. And in this case, we have this behavior that you see every time we get below 1, we are in a bear market and we stay below. When we're trying and we retest the 1 multiple times and we stay above it, we are going and we're seeing the market changing direction and going into a bull run even before the bull run really starts. You can see it by here, watching the movement it has. You see yourself anyway. Every time we got into a new bull run, every time we got up or down, up or down, or up or down, okay? And we are still below 1, and we're still selling at a loss. I don't see why we should enter, in this case, an argument of a bull run when we don't have one. Neither we have data supporting that. The thing here is that we have still a lot of people who are actually holding that are more than 1 year old. Even if some 1 to 2 years were selling right here in the lowering the price of Bitcoin because they bought the top right here or the top right here. Now we are actually seeing more and more that just the last price action movements are being just short-term holders 1 day, 1 week, 1 month are actually selling into the market, and the majority of weekends are gone and we're just waiting for this bullish momentum to to regain, to have this bullish momentum to the upside. The buy pressure and the long term with the DCAing and with all the others we have will lead us into the next bull run, but we will have to we'll need to have time. We'll need a dollar, and we're going to talk about that. A dollar, a weaker dollar, because with a stronger dollar we can see in this environment in general on the global side, we can see that. Let me just 1 second right here, because it's starting to get real dark right here, darker than I would like, and so that's it. Now you see that we have hodlers right here. It's just to make you know, I won't spend much time here. And another thing, you see right here, we got in fact the percent of supply in profit to bottom. Okay, every time we bottom, and I think this is one of the most undervalued tool we have on Onchain for the bottom, because for the top it tends to get to the overbought level, where there is the 97, 99, 100% of the supply in profit, and then we got a little bit of a drawdown because it tends to overeat really fast. And but in the cool down zone, in the green zone, I think it is, you see yourself, it is very, very effective every time for the bottom of the market. And we got to the point where in fact we had 1, 2, 3 points where we were below the 50, and that's a huge point for Bitcoin, and that's actually helped out to help us support the price. This is a great time to buy, and I will say this again and again, even if this is not just for this particular tool, but in reality, for all, in the aggregate, for all the things that I already talked about multiple times, multiple tools, multiple indicators, multiple things that are going on in the macro environment. And we already saw the short-term holder realized price, the long-term holder realized price. Actually, that is the more than 5 months older realized price. Is sitting at 20.8k, and we'll have to break above that before getting into the short-term holder realized price, before getting in fact there. And this is a huge point, because until we stay below there, this is a great time even here to accumulate more Bitcoin. The last time, every time we get below or even on to the long-term holder realized price, you see yourself that we were in a spot where buying Bitcoin was really, really, really profitable. And so I'm watching that carefully from a long time now, and I'm not seeing the price falling really much more below the 14k, and still I retain my price prediction and price bottom prediction until it is proven otherwise, because everything just call me that. Every data I have just saying that. The only thing probably, but we'll have to see, something I talked about, I don't remember where it was right now exactly, is the fish realized price. If I will find it, probably address bands realized price right here. Okay, let me just get the entire picture, and let me get out the shrimp, scraps, and everything else. Just let me have the fish. You see that the fish, every time we touch the fish realized price, the fish are 10 to 100 Bitcoin holders, we got to the very bottom of the market, and then we got up. And every time it happened. And this time the fish are 12.5k. This is the only one, the only support that I think it could Bitcoin could reach in the very worst scenario I can think of, just with a shadow, with a liquidation event that touch this line and get pumped up in a liquidation, in a short squeeze next to the upside, maybe again on 14k, 15k again. That's what I'm really seeing in the worst case scenario ever. And going on here, MVRV crosses is the last tool, the last indicator that I'm watching, this on-chain metric, to see if we are bottoming. Every time, in fact, we did got these green zones right here, and the long-term holder MVRV got below the short-term holder MVRV. The TLDR is where the profitability of the long-term holders are below those of the short-term holders. Then the market bottomed, and we got projected into a new bull run in the even if it took months. We got to the very bottom, and you know, maybe this time as well, if we get below, that will be the bottom. I'm watching it very closely because it happened. It didn't happen really much, and in fact it don't, and it doesn't, and so I'm watching it very closely, and I would like to see something like that before assessing that we have a lot of proof that is the bottom, even if we're not in right now, and I'm just waiting maybe for the 14k or 15k, 16k, in that range, 20 to 14k, as I already said. So here is the fear and greed heat map instead, and as you see right here, we got to the fear level we didn't touch until the last time was the COVID crash, or the very bottom of the market, and in this case we got to that point as well. Really fear, and we are not seeing that right now. The fear has gone, and probably the market is just staying in the same position, waiting for something to happen, and that what I'm seeing right now, the market is actually completely driven by illiquidity. So really very low amount of person moving and trading, and whales in this case that are trading a huge amount of money in an illiquid market, so they can move and change the price itself, make some fake movements, going to get the stop losses, so stop hunting and something like that. And in the majority, in every single asset I see, from the macro environment, from the central banks' monetary policies, and all the things that is going on with inflation in the world. So with the housing data as well, everything is going. Everything touches the macro environment at the end. And this is just another confirmation for me that we are just waiting right now. We are just need to wait a little bit more before entering a bull run. And this is the realized price versus the 200 weekly MAs. In this case, we are talking about the EMA and the SMA as well, but you see, the 200s, we used it as support every time, and we are now below, and so this is, if it's not this, a great opportunity to enter the market. I don't know what you call a great opportunity to enter the market. I don't really know. We are below the realized price. That is the realized price in general, not long-term holders, not short-term holders, is from the aggregate that sits actually at 20.8k, more or less is the same of the long-term holders, because the majority of long-term holders have a lot of coins, and they are the majority of people holding Bitcoin, and that's why Bitcoin is still creeping up to the upside in all these years, because there are people that is still holding and holding and holding and holding through a lot of time this asset without even spending it. And anyway, we are below the 200s as well, so why not entering? And this is the average spent coin, the average spent output lifespan, I will say, but you can call it average spent coin age. It takes in consideration the UTXO lifespan from there is an insect. I guess, that is flying around, and this is creepy. Okay, let me get rid of that. I'll come back in a minute. I will have just to be right back. Well, it flew away again, so I don't know where it is. Anyway, let's get into the chart again. As I was saying, this takes into account the UTXO lifespan and not the amount of coin you move. So, $1 bill, $100 bill is the same. If you buy something, you count as one. Instead, in the case that we are going to talk about of the dormancy supply adjusted, this is not true. Where you buy with $1 or buy $100 things, it takes into account that, and this is a volume weighted metric. This is not a volume weighted metric. This takes into account just, in fact, the UTXO itself to see, and this a coin is destroyed derived metric. That we can use to see if long-term holders are actually selling or not, if there is some long-term holder selling and something like that, to assess if the underlying holders behavior, those are that have conviction in the asset, is failing or not, or is getting stronger. So right now we have low values for this, really low values from a UTXO perspective and from a dormancy supply adjusted perspective as well, with a volume weighted metric. And you see yourself that we are very below. Every time we get into a point where we are seeing a bull run, these metrics tend to go up and make spikes where long-term holders effectively sell in mass, and you need a lot of buy pressure to get up from there. Since we are in a bear market, I don't see anything of that. I just seeing the metric just slowly getting lower. So nothing changed since now, at least. And the same goes for the coin that is destroyed themselves. You see, we have very low value of the depth of the bear market, as you see right here, even below in the last few days we had. So this is more likely what they talked about. And if we watch the sell bubbles, you see that the majority of people are actually selling. The selling is going from, in the last 30 days, from all the people who purchased in this range right here, and someone that did in fact bought 30k, but nonetheless there isn't that much people that bought 45 or more, or anyway 30 or more k that are selling. Every bubble here is the little one like this are 250 Bitcoin per bubble, and this huge bubble are actually very much Bitcoin. I don't really, but you get, because there are differences of millimeters, and I don't really know exactly, and I wouldn't say something that is inexact. Because I'm an analyst and I dislike very much to do something inexact. In this case, as you see right here, the majority of people come from here, and this is a short-term holder behavior of those who are in the market themselves. And so this is just another confirmation anyway, not really that much more of what I could. Let's take the last things of Onchain to talk about the address balance. Here we have humbucks. You see yourself here the number of bitcoins they hold, and here is their name. We call humbucks in this case 10k or more bitcoin holders, and I'm not going through anything any of that more, but you get it. So I found it again, that insect, that maleficent insect, but I would like to let him for now stay. So we got this humbucks behavior where they started buying and making some good accumulating thing all the way to the downside, and now we are at the point where we got a month heights similar to the point where we got back above to the abyss from the 3k level that we were actually in 2018, where I entered the market more or less. I entered the market more or less right here and started initiating all the way down, and here I thought Bitcoin was dead, but anyway it wasn't, and I stayed strong. I held it through, and here I am anyway. And we got to this point, but why? Because whales are actually becoming humbucks. They are accumulating so much in the last few days, in the last few weeks, month, that they are actually becoming humbucks. You see the same behavior, up to the upside, down to the downside. Whales are becoming actually humbucks. Nothing more to say. Sharks are actually accumulating a little bit in the last few days, in the last few weeks. And in the last few days they are actually selling off, but it is just a behavior that we are saying they're actually, we could say that they're actually going sideways in the last few days. And fish are accumulating strongly, crabs are accumulating strongly, but crabs more or less accumulate every time and just accumulate. Shrimps and plankton as well, and this is the buy pressure I would like to see, and I will. This is the same buy pressure that we'll see. I'm sure of it, pumping us into the next bull run. They're slowly but slowly, and we'll see that when the dollar will start printing again. This will be just a buy pressure that's explosive. But anyway, talking about the DXY, the dollar, how much is strong, you see yourself that here we have the DXY, obviously it's closed, but we have the DXY that is really strong, and 112 DXY waiting on 57%. The weight is from the EURUSD chart right here, the pair. That is going down against the dollar because the ECB is actually putting down the TPI, the transmission protection instrument, that let's say it's trying and helping the ECB, giving the power to buy weaker bonds and diminish the spread, for example, by BTP Bund in Europe. And why that's important, because if you don't have the money, you have to print the money to buy those weakened bonds, and so the market is pricing in that. And not only that, even the fact that they are not raising hikes as fast, and they are very far behind the Fed itself. So the euro is losing track, is losing power against the dollar, and that's obviously bad for the equities, indexes, Bitcoin, and the crypto in general, and every other dollar-denominated assets. The JPY instead is the same. The JPY is waiting like 13%, I guess, if I remember correctly, on the DXY, 13 to 14%. And Kuroda, the Bank of Japan, because JPY is Japanese currency, is actually selling their money into the bond market to get to a yield curve control mechanism that, you know, we have the same on the ECB part It is the TPI instrument. That fucking insect. I'm going to kill him probably. So that's the importance of if you have to print money against against a dollar that is actually tightening from a quantitative tightening perspective, and as well as raising interest rates. You can get just a dollar that is too strong, and the dollar too strong is actually waiting on the S&Ps, on the Nasdaq, on the Dow Jones that is actually making new lows again. It's really weak. And the S&Ps as well. You see how much bearish this price action is when you get new lows after a bear market rally. You get new lows, and then you'll be projected to the downside again, 3.4k. If we get down below the 3.5, 3.6k right here in the 3,585, we could get to be projected to the 3,391. But that's not all. I'm not going through today all the debt, GDP, and everything else because I already said that. If you want to have that kind of argument, you can watch the last one. I'm just making now a point to everyone right here, and I'm getting into only face to say that I'm making a point from the macro perspective arguments. So what I think about the what will happen in the markets is this: the Fed will keep raising interest rates until you see the insect flying right there, right? It's distracting a lot distracting, really much. Okay, so the Fed is actually going to raise interest rates until the inflation goes down to 2% levels, or more or less 3-4% levels, and that or something breaks. And if something breaks, they will start printing again, because obviously you can just destroy the economy from a perspective. If you have to choose from breaking an economy and having inflation, you choose having inflation. But if you have to choose having inflation or not having inflation with a strong economy, you choose not to have it. So we're going to see the Fed raising these interest rates. Probably we get another 75 bps, and more 50 the next one, 25 the next one again. This is going to be priced in by the market, rate by rate, FOMC by FOMC, but this is what I'm talking about. And if I think that if we are going into the winter where there is a lot of demand from the heat, from the housing heat, and for goods, because there is Christmas, there is the first day of the year, there is a lot of festivity. There is the the Halloween event, and more of this, so there is a lot of demand, a lot of things that are actually going to get inflation worse. And I think the Fed will have to keep raising interest rate, maybe 50 to 25 bps even next year, and I don't know if I can get it today. Okay, it stopped. And in this case right here, we'll have to wait until the end of the 2023 before getting to a point where actually the Fed will bring out a new quantitative easing or an easing monetary policy. I will start maybe cut rates. I don't really know, but I think they will stop at some point to raise interest rate, and they will stall for a lot of time, like 3 to 6 to 9 months, stalling at, I don't know, like 5%, 6% interest rate, Fed funds. We'll have to see. but they are going meeting by meeting, and I'm doing this also because I don't have all the data and all the things. So this is most likely what I'm talking and thinking about. And if this is with all the other central banks that are not actually raising that much of interest rate, Bank of England is actually making a quantitative a quantitative easing with the raising of interest rates. So they are actually teaching the world how to ease without easing, just making something useless. And in fact, you see yourself. Let me getting into here the GBP. You see yourself that the market is pricing in that. You see these candles right here being bought just for speculation, obviously, because you get a lot of money if the pounds get up. But we got to more or less the point where we pegged with the dollar, okay, and it was like some month ago. Last year it was 1.42. Today it got probably 1.03. So you can just imagine how much money you can make if you have billions or millions just by buying something like that. And so I was saying this and more is actually happening, and I don't think we'll have anything more for the next few months. Just this. If you want more information about the macro environment, you can just follow me on Twitter. I do weekly analysis. You can get me on ChainLog. If you buy my subscription, you can talk with me every day, or I think you can make any question. I'm doing like daily videos for that as well. Really fast, actually, because we are in a bear market. But if you have any question, I can make a video for you. I can explain you things. I'm a teacher, more or less. Not more than that. I'm not a financial advisor, as I already said. So there are those courses. Actually, they are video courses, and there is not a certificate. You can buy the subscription, and with $15 a month, you can get the free courses as well. So you can stay. You can imagine that you can stay to have a group. To talk to people who can teach you, and I have a lot of resources that I read every day to get ahead or above the curve. And there is this library. In fact, on the Discord, there is the important news sector where I get the most important news from Twitter and from every other newspaper online. And there is a lot of things that you can see yourself if you go to chainlog.info. So this is more likely what I would like to talk about today, and this is it. So if you have any question, you can get me there. All the the links are in the description, and we'll see you next time. Good luck, stay safe, and just wait for the Fed.